Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Friday, December 19th. We are honing in on our newsroom's predictions today for the new year. I'll be joined by our editor-in-chief, Jessica Lessin, along with our AI, venture capital, and crypto reporters. We'll then dig into predictions for the worlds of media and e-commerce, and we will wrap with our weekly editor's cut. Martin Peers joins the show to talk about who he thinks is the real winner of the U.S.-China TikTok battle after TikTok signed a deal to spin off its U.S. business. It's going to be a fun show, so let's get right on into things. It is the end of the year, which means it's a perfect time to sit down and make some predictions for 2026. The Information will be putting out a bigger package of predictions in the new year, but we want to give you a sneak peek of what our newsroom is thinking about. We're going to start with our editor-in-chief, Jessica Lessin. Here's a conversation about what Jessica sees coming. Hey, Jessica, how you doing?
I'm great, Akash. Looking at 2026 already. Can't believe it.
2026. Well, look, you hosted your predictions webinar for our pro subscribers last week, I think it was, and there was a lot there. And what I want to do is I want to give people a little bit of a taste of the highlights of that. And so walk us through some of your biggest predictions for 2026.
Absolutely. So, I am really predicting major tech layoffs. And I think perhaps this is surprising because everything seems up and to the right, and there's so much exuberance in the tech economy, but also a lot of questions. And so, first off, I think that the combination of cost pressure on these massive AI infra spends, and also the fact that these big companies can do more and more efficiently, I think is going to lead to very substantial layoffs. We've seen a small drumbeat, and I think that will accelerate in 2026 for sure. So feel confident about that one. And I think it's an interesting one because it shows sort of this dichotomy that has started this year, this exuberance, but this paranoia, this invest for growth, but keep belts tight elsewhere. So I think that will continue.
So if you had to pick one company that you think for certain, I mean, is there any one name you're looking at? Is it a hyperscaler? I mean, who are we thinking about?
I think the Amazon's, Microsoft's, Google's, Meta's, Salesforce's act in concert. I mean, if there's one thing I've learned in 20 years out here covering big tech companies is there's a lot of looking and seeing. I mean, I guess I've learned many things, but they really act in concert. It's like there's a window where you have permission from the markets, permission from the talent markets to belt tighten. So I actually think it's not a question of problems at one company, although everyone's got their issues. And I'm also predicting that we'll see, instead of like a tailwind that rises all boats, some real winners and losers when it comes to the major big cap tech companies. But I think when it comes to layoffs, it will be across the board.
Okay, so now we published a story this week about how the organizational structure at OpenAI has led to some of the challenges with ChatGPT over there. I wonder how you're thinking about the ChatGPT Gemini rivalry. Do you have any predictions there?
I think it will continue. And I do think that it's a momentum game when it comes to some of the capabilities of the models. I do think all models converge to some respect, although they also diverge in terms of their specialization. But, I think Gemini's momentum is going to continue. And I think we're going to see another major tech player, maybe on the enterprise side, probably enterprise versus consumer, really adopt Gemini and maybe sort of throw in the towel on some of their own custom model development, and really figure out that that's not the place to play. I mean, perhaps Apple is foreshadowing this a little bit in that we've seen it go first with OpenAI, but now more deeply Gemini for Siri. Although Apple is still committed to its own foundation model development, we hear. But I think if you zoom out and you look across consumer and enterprise, I think more and more CEOs are going to make the calculus that this is not the CapEx race, the research race, the talent race they want to be in, and that they want to get their edge, they want to get their margin in their more custom use cases and use other models. Now, we've obviously seen this in search. We've seen this in many other paradigms in consumer tech. And I think Google, with all its relationships, is really poised to make a move here.
Right. Okay. Now, speaking of predictions,
Yes.
what do you make of these prediction markets? I mean, how do you think that story changes in 2026?
Well, first, what a story of 2025. Kalshi, Polymarket, not only just in their user growth, but in their embedding in the traditional financial system with partnerships with New York Stock Exchange and more traditional institutions. The information broke a week or so ago, news that Coinbase was partnering with Kalshi, which came out this week. Wouldn't quite call Coinbase a traditional financial institution, but it's on
But
its way.
it's more traditional than the prediction
Yes,
markets in
yes,
some
that is
ways.
where we've ended up, yes, but, and it certainly wants to be. So incredible momentum, but I think 2026 is gonna be a very, very tough year for the prediction markets because I think the regulators are finally gonna catch up. This reminds me of when Uber kind of came roaring into the taxi and ride-hailing market and said, "All the traditional regulations around this, they don't apply." And it got them great momentum. And then it got them years and years of battles with regulators. Now, this is kind of how tech plays out. And I definitely don't think it spells doom for these prediction businesses, which are fascinating. But I think in terms of where the energy and momentum and time spent is going to be next year, it's going to be pushback from the states on sports betting. I mean, I just don't believe that the states are going to turn a blind eye when so much revenue is at stake for them. And I think that will play out in other areas as well. So I think adoption will continue, but there could be some recalibration. There could be some changes to the business model. There could be some deal cost cut for those platforms to see the next phase of growth.
And I think, I mean, to your point, all it would take is really one mega trade. We've written about some of the suspicions around insider trading on these platforms, stuff like that. I mean, really all it takes is one wake-up call, as we've seen with crypto and maybe with predictions markets, to change the entire game. I want to
To
ask
throw
you
them
about,
off course. I do, to be clear, if there's so many lessons from 2025, but finally seeing the Google monopoly search deal come to a close, which, let's face it, is not the most pressing issue in the technology sector over the last 6 months. We've moved beyond it. I am in the camp that this regulation, ultimately doesn't, tilt these companies or destroy them. But in terms of the ins and outs of what they're going to be spending their time on, what headlines you're going to see, how products are going to adjust, I feel that's a certainty for next year.
right. What about media? I mean, this has been a crazy 2 weeks for media, not just with the Warner Brothers, Paramount, Netflix saga, but we just saw this week that YouTube is getting the Oscars. How do you think that story
Sure.
changes in 2026?
You just can't bet against YouTube. I actually predicted on my podcast with some friends of my husband this week that a creator is going to win an Emmy next year. We'll
Okay.
see, but I do think that the sort of YouTubeification of media, or whichever direction we're going in, is a real thing and pretty unstoppable. And I think ultimately, people who exist only on YouTube, not like then license a show for Netflix,
Right.
have a real shot at an Emmy. So that was a different prediction I made. In our industry, Akash, I think it's more troubled waters in media. I think we are going to see a lot of publications realize that people aren't reading their stories because they're not original. When even our best institutions doing excellent journalism, like the Times, are pushing us into other experiences. When I open my Times app, there are 5 tabs and only one of them is news and 4 of them aren't. And that's the
Hmm.
main interface to the New York Times app. So the Times is a leader, and I think others will really push that playbook. And that's gonna, potentially mean fewer or less attention and fewer resources to certain types of journalism across the industry. So I think it will be tumultuous and more of the same, and probably consolidation as well. So I would look out for those of our listeners who are into the inside baseball of the digital media landscape. I would look out for many more airmail puck like tie up tuck-ins. This is when Puck bought airmail. earlier this year, having very common ownership on its investors. So I think that consolidation, we'll see what plays out with Netflix, Warner Brothers, and Paramount. And I think that mentality will trickle down as well.
Well, let me ask this very quickly. If there's an Emmy in 2026 for a creator, is it Mr. Beast or is it somebody else?
I think it's someone else. I think
Someone
it's someone
else.
else. I
Okay.
think the
All
field's
right.
open.
Great.
I also think that this is on YouTube's radar. I think I've spoken to creators who said they're going to YouTube saying, "Help me win an Emmy." Um, and I think these companies and creators are great executors, and so I think it's going to happen.
Great. Well, Jessica, it was great to have you on. Look forward to seeing all those predictions, how they in turn actually evolve in 2026. It's going to be a busy year, I'm sure. And thank you again. That is Jessica Lesson, our editor in chief here at The Information. Let's go now to our reporters to see what predictions they are thinking about. We're going to start with AI, and then we're going to go to venture capital and crypto. Joining me now is Stephanie Palazzolo, our AI reporter. Hey, Steph, how's it going?
It's great.
So let's talk about predictions for the upcoming year. What is one prediction that you want to make here on the show?
Yeah, so I think the tough thing about AI is it's very hard to predict, what the next, month is gonna bring, let alone the next year. But I think my prediction for next year is that Amazon will have to acquire a large AI lab. I think out of all the cloud providers, it does seem like the one that's perhaps furthest behind on its AI strategy. Obviously, Microsoft has a very close relationship with OpenAI, and Google has models that are doing super well. Especially in the last year or so. So I think for Amazon, we can even see some of the troubles that they've been going through some recent changes at the company. So, just this week, it had a reorg of its AI development team where we saw a AWS exec become the head of the team, which was quite an unusual choice. And it just seems like there's a lot of, people changing positions there, people moving around. Kind of makes me feel like maybe going into this next year, they're going to be prepping to make some serious changes to the company and perhaps, bringing in an outside startup.
Okay, so which lab do you think it's going to be? Have you
Yeah,
got?
so it's tough. I mean, if they really wanted to go crazy, I would say Anthropic, although that would obviously be a very expensive deal. I
Yeah,
think a more realistic but still pretty out there prediction would be something like Thinking Machines Lab, which of course is founded by former chief technology officer of OpenAI, Mira Murati.
right. And do you think that that is an outright acquisition? Do you think it's more of one of these acquihire type funny deals that we've become so familiar with?
Yeah, I mean, it seems like at this point, like the traditional, acquisition just doesn't really happen anymore. So, I think, with that and the fact that Amazon would actually would obviously be under a lot of kind of antitrust uh scrutiny, I think it'd probably be the acquihire route. Obviously that's continued to be a really big trend this year with things like the Google Windsurf deal and Meta and Scale. And so I think they would probably also fall within that trend.
Great. Well, Steph, I want to thank you for coming on. It is a bold prediction, but hey, if Mira Murati joins Amazon, then we will be sure to play this clip 1 year from today, and we'll hope to tell you that you were right. That is Stephanie Palazzolo, our AI reporter here at The Information. Okay. Well, next up, we are moving to venture capital, and we are bringing on our Deputy Bureau Chief of Venture Capital, Katie Roof, for a conversation on what her predictions are. Katie, welcome back to the show. It's great to have you here.
Great to be on with you.
So, what is your big prediction for 2026?
Well, I have several predictions, but my first
Several. Okay, not
yes.
even one. Okay, all right. I'm ready for it. Lay it on us.
Well, the first is that the AI boom and the private financing side is going to continue to at least Q1 because we're already hearing about a lot of companies that have marked their calendars and said, all right, we're going to do a round in Q1. And so um, that doesn't show signs of slowing, even though there have been some market jitters recently. It can take a minute for the private markets to catch up with the public markets. So, at least for now. More
Okay.
AI fundraisings.
What about with IPOs? I mean, you have any predictions there?
So I actually think the first half of the year is going to be pretty slow. There's a handful that might go, but the big names that we're hearing rumored, none of them seem to be ready for the first half of the year. Um, but the second half of the year, or by mid-year, it could be very active. I recently broke the SpaceX IPO. There have been many stories about that now, but I I'm hearing that they're aiming to go mid to late next year. Obviously, sometimes IPO plans change, but that would be possibly the biggest IPO in history. And then we also have potentially Anthropic, and then some of the other big names looking at the second half of the year.
Okay, but how big in H2, Katie? Because we're going to break the fourth wall here a little bit. Okay, we did talk about this at a time. You told me you were expecting a record H2 for IPOs. Are we willing to say that that's going to be the case?
Yeah, because SpaceX by itself is going to help cement a record. I mean, they are an $800 billion company by their own valuation they recently set. And if they exceed that or even match that, it's just very unusual because, if they float, 15% of the company. I mean, it probably less, but we'll see. I mean, if they float a lot of these shares, then there's just so much transaction volume to trade right from the get-go. And so it's record setting in the sense that you have SpaceX, potentially another record IPO like Anthropic, and several other really big names thinking about it.
Right. So we could see, I mean, this is a lot of capital being raised, as you said, so we could definitely see that play out. What about with fundraise? I mean, you talked about the AI startups raising money. What about in venture capital land? What predictions do you have there?
So I had a chart that recently went viral about how it's, actually the most difficult year for venture capital firms to do their own fundraising in at least a decade. And so I think that um, that might continue. I don't know if it will go decline further or remain constant, but it seems like the expansion we saw with lots of tiny venture firms springing up in 2021, 2022. Unfortunately, a lot of those firms are going to have trouble raising their second fund unless they were really early on some AI thing. And so it feels like it's a tale of two cities in venture where I've been saying this for a while that you have on the one hand like Andreessen Horowitz and Lightspeed and some of the big names raising like record, many billions of dollars, and then you have the smaller firms that just can't even get a little more money.
Right. Okay. Well, the big get bigger, as they say. So I'm excited to see how all that plays out. Katie, it was great to have you on the show, and we'll have you on again soon. That was Katie Roof, our Deputy Bureau Chief of Venture Capital here on TITV. Okay. Next up, we are going to wander into crypto. It has been a crazy year, and we are anticipating things will only get crazier. I want to bring on our crypto reporter, Yuechi Yang. Yuechi, welcome back to the show. It's great to have you here.
Hey, great to be here.
Okay, so 2026, what are you thinking is going to happen next year in crypto?
So my prediction is Tether, the largest stablecoin issuer in the world, will start to lay the groundwork to go public next year.
Tether. Oh my gosh, of all companies, Tether. And they're gonna lay the groundwork. I mean, talk a little bit about why you think that.
So this might be a more controversial predictions. I will start by saying that Tether itself has said that they do not have plan for an IPO. But then at the same time, I think there are reasons for them to try to go public. First, going public is a great way to gain legitimacy, especially in the US. And this is the best regulatory environment that they can ever get. we know that the Trump administration is very pro crypto. The investors on Wall Street right now love crypto companies. Stablecoin legislation was just passed this year, and Circle, which is the biggest competitor of Tether, was doing very well in the stock market. So I think there is appetite and regulatory environment for Tether to go public. And then on the other hand, Tether is currently raising a massive round of funding of up to $20 billion. And so at some point in the future, they will need to figure out a way to provide liquidity for investors that are participating in their fundraising round.
So can I ask a bit of a stupid question here, which is that I know that when Circle went public, I sort of understood the corporate structure here. There's Circle, the company, and Circle issues USDC. Is Tether structured the same way? Is there a corporate entity that would be going public that issues Tether? How does it work?
Yeah, that's a great question. Yes, Tether issues the USDT Tether stablecoin, and Tether, the company itself, is a very tightly controlled company. They don't have many shareholders, so their corporate structure is kind of different from Circle, which prior to their them going public, they raised rounds of VC funding, and they have a lot of outside investors. So in that sense, Tether is different. Tether recently also launched a U.S. entity that they use to issue a U.S. version of the Tether stablecoin, which will be targeting the U.S. market. And that token hasn't gone live yet, but we expect it to go live very soon this year. And that's a smaller business to start. So we'll also be watching out if that business might potentially grow big enough to go public at some point.
Do you think that Wall Street is ready for a Tether IPO? I mean, crypto is already the most volatile thing in the world. And here you're adding Tether. I mean, what do you think happens?
So when I talk to investors, when I ask them about their appetite for Tether, the first thing that everyone says is Tether has the greatest business model ever.
Oh,
They
okay.
pay
Well,
to make stablecoins, and then they earn interest on the money that they take from you, and they do not give you or pass along those interests back to you. And Tether is expected to earn more than 15 billions in profit this year, and it is just one of the best business model that people have seen. So in that sense, there is great appetite for being able to gain exposure from Tether. But then at the same time, I think people are pointing out that there are significant hurdles for Tether as well. The first thing is that Tether does not have audited financials, and that's a must-have for any company that want to go public. Tether for years talked about working on audited financials, but that hasn't come into place yet. And at the same time, there's also regulatory concern for Tether because the main Tether stablecoin is not Genius compliant, and they will need to figure out a way to comply with the new stablecoin law in the U.S.
and I just want to put a finer point on it. You're saying that the groundwork will happen in 2026, but maybe an IPO is more of a 2027.
That's my expectation, and
Okay.
that gives me more room to make the
More. There you go. All
more-
right. Well, it's a fun one, Yueqi, and I can't wait to see how things play out. That is Yueqi Yang, our crypto reporter here at The Information. Okay, our next segment is with our sponsor, PwC. It's been a busy year for tech and media trends, and PwC has had a front seat to it all with the many clients that it serves. I want to play for you a conversation that I had with Dallas Dolan, a leader at the firm's tech, media, and telco practice, to talk a bit about what he sees being the defining themes for 2026. Here is that discussion. Dallas, welcome to the show. It's great to have you here.
It's great to be here. Thanks for having me.
So I'm excited to talk all about your predictions. I want to start with the media sector because, look, the Netflix, Paramount, Warner Brothers Discovery is continuing to make news this week. I mean, if we take a step back, what are the trends that you see being the defining themes for 2026 in that sector?
Yeah, I mean, we wake up every morning to new news on that front, especially if we're on the West Coast, right? I think what we're seeing probably is a couple of things, right? First and foremost, it's the need to demonstrate that there's value in new formats, that the bundling and the overall experience is something that the consumers want to pay for. We're starting to see some level of integration of technology. Certainly, it's been happening for some years as far as the recommendations you might have been getting on different services. But the reality is we still haven't seen the requisite probably amount of consolidation to create the amount of value that the users and really the people who are, frankly, funding all of this in the content space really need to get out of these services. And you also have probably too many subscale streaming services that are out there in the market.
Right.
And so, consolidation is inevitable. These latest sets of deals that are, coming down the pike and that are the front page news for every cycle here are really just an example of the big guys getting together and figuring out like what that looks like and some of the muddling through on the same. But I think we'll see a lot more of it in the year to come.
So you hit on a good point there, which is that consolidation. I mean, from a business perspective, sometimes these businesses have to consolidate to make the scale work. But on the consumer side, I'm curious. I mean, are you seeing fatigue from consumers with respect to having too many subscriptions? And is this ultimately a trend that we're seeing on the ground?
100%. I mean, here's the reality. And I'll use my example from last night flying back from Texas. I sometimes don't even know what subscription services I have access to and what passwords I am used for, to get into them. And I'm texting with my wife trying to figure that out.
Right.
But beyond just the practical application point of that, you do have the affordability dynamic, which affects a lot of other, decisions too that we'll talk about. I think that affordability piece, especially if you don't have the convenience feature built into it, and people begin to, see some, lack of value and or the lack of use because they're doing other things, they're working more, they're spending more time, with family and friends and the like, especially this time of year, you're going to start seeing decision making, I think, happening there finally. That, of course, assumes, by the way, that there is pressure on the consumer from a financial point of view. And we are seeing that in the data, right? The data says that consumers are incurring more debt and that they feel less confident about the economy overall. That has to come to a head at some point, I think. Now, that's, we're in prediction land here for 26. And so the reality is it doesn't mean it's absolutely going to happen. But I have the sneaky suspicion that eventually, either the financing side and or the consumer side is going to put a lot of pressure on, especially the subscale ones, and say, hey, look, we can't continue to support funding to build these one-off services, and the pressure will be on to consolidate or close or do something along those lines, especially to the extent that they built original content and have followers of that content. And there are great pieces of content spread across a lot of different providers.
Well, and you hit on a good point, which is that, look, we haven't talked about the social media or the YouTube element of all this being the elephant in the room as it relates to these media companies competing. And I think that could be something as well that continues into 2026 is this idea, how much share does YouTube have of watch time on televisions? I think it's going to be interesting.
Absolutely. And maybe the word, to describe that is, the traditional media companies are really still playing catch up with some of the techs who've done this already, whether we want to admit that or not. There's the intermediary type of companies you mentioned before who've, bridged. They've had one foot in one land, one foot in the other. You're starting to see other deals that are coming through, especially with the AI native companies saying, "Oh, hey, can we produce content more effectively and efficiently, and also can we take cost out too?" Because those are all also pressures that you're seeing from activist investors. Certainly, boards are starting to ask those questions as well. So all those dynamics are going to come into play
Right.
probably pretty quickly here.
What about e-commerce? E-commerce is such an interesting space right now because you get all these AI companies looking to e-commerce and shopping as a way that they could make money. I mean, in 2026, are we going to see all these chatbots integrate with e-commerce more closely, or what do you think is going to define the year?
I think 26 is your, gateway, so to say, year for all of that. People are beginning to use it. It's generational, dynamically, right? You're starting to see, the youngest generation, Gen Alpha, who are out there, the first AI native generation, who are, learning everything, about the world through the lens of artificial intelligence and agentics. My 12-year-old may be disappointed that I'm not wearing a quarter zip as opposed to the full zip that I have on, for example.
It looks like a quarter zip from here, mind
Okay,
you. We
good. We'll
can't
just
see
keep
it.
this at this level.
Yeah.
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 But certainly, I think what we're going to see is 26 is the the lead-in point, around everything that's happening with agentics, driving towards the outlook, probably 5 years out from today, which is a much larger market where agentics probably dominate a lot of the online retail and the online e-commerce that's happening. There are estimates out there, upwards of like $75 trillion economy that could be, mostly driven by AI around commerce, which is incredible when you stop and think about it. But at the same time, if you have literally hundreds of millions of people coming of age in these AI first generations, that actually makes a ton of sense. The intelligent commerce is also going to affect some of the other players who are out there in the payment space and those interlocks as well. And that's going to be something that's really exciting to see across a number of different vendors, and how do they all consolidate.
I wonder if you have clients involved in e-commerce at all that are thinking at all more about physical storefronts. I'm not saying that the trend is going to reverse here in terms of people starting to buy more stuff in stores than online. I think that direction is clear cut. But I see these ads of tech companies now, and even AI companies. I mean, maybe we're trying to get people back in stores.
Yeah, there's no doubt about it, because there's the experience side of things that people appreciate. I'll give you an example, not kidding. 15 minutes ago, I got a phone message from a retailer who I'd interacted with and bought something from in another country recently, calling me to wish me a Merry Christmas and asking me when was the next time I was going to be back in that country to buy something again.
Huh.
That's a personalized experience from somebody I probably will never meet again, but that's incredible. And if you stop, but it's meaningful too, right? And if you stop and think about it, if that's meaningful to me, it's probably meaningful to a whole cohort of folks who are in that buying stage of their lives, right? Me down on through to my kids' age, and so that personalization is absolutely, and that relational dynamic is absolutely going to continue to be a driving force, which is the counterbalance to everything just happens online, and I just tell my my bot, my agentic, to go buy something for me. I think there'll be things that your agentics will go do for you, and you don't have to rethink about that shopping list that automatically goes and does things for the commodity type items. But that personalized experience is still going to be really critical for anything above commodity and into that premium space. And that's probably why you're going to have, probably still, a continued shift towards that merging of worlds, if you will, where personalization is key, and getting people back in these, stores is key too.
Okay, so that's AI on the consumer side. What about AI in the enterprise? How do you see that conversation changing next year?
Yeah, a couple things. I mean, we've all talked about the concept of pilots and proof points, and the real question is going to be, when does ROI come into play, and how do we get value actually of all the things that we've probably spent money on, whether it's enterprise GPTs and LLMs, or if it's just integration within a given SaaS platform. I think you're finally going to see CEOs and boards and CFOs saying, wait a second, where's the value proposition? What am I actually seeing from a people point of view? Am I able to reduce headcount? Am I able to get more sales out of my sales team without having to increase the headcount? The reality is, in a lot of studies out there, I know MIT did one a couple months ago, basically saying the ROI wasn't there in like 90% of deals. So that has to change. Like that numeric is not supportive of any of the larger deals that we see out there, including the one we woke up to this morning between a couple of big companies that seem to continue. So I think there's a reality of ROI, but the good news is we're finally starting to see maybe the engineering that's able to integrate the scaled capabilities on AI into the platforms a lot of people are already using. So whether it's CRM, whether it's the controls platforms, whether it's the ERPs themselves, all those things are going to have the AI built directly into it. You're not going to have to rely on the custom experience, the customization that people have been doing really up to this point. That's where the value proposition, comes into play. And we get rid of, the AI slop, we'll say, because that's the thing that I think is probably the most frustrating part of the experience people have had with it, which is just not having a consistent experience, or worse, not having something that's necessarily good and useful.
Very quickly, what do you think changes about job descriptions in this era of AI at all these companies? I mean, we hear time and time again about the implementation of AI depends a lot on the people that you have using these tools, implementing these tools. Is 2026 finally the year where some of these new jobs kind of come into focus in terms of how we evaluate whether people are using the tools effectively?
Absolutely. I mean, it's the only way you're going to get ROI. And you made the point about job descriptions. It's going to be accountability for use of AI is going to be a premium. How people are rated and evaluated, it'll absolutely be a part of that process. But it's also a part of the intake process too, including what are job titles and what do people do. I mean, maybe you won't have a agentic team leader necessarily, and you have a manager over a bunch of agentics, but you will have people who within the job description, so what HR is writing, what the recruiters are writing, and what every department is going to have an expectation around, department head will have an expectation around, is their people will be using this technology and they will be using it to build in efficiencies, to make themselves smarter, to make themselves faster. And so I think it's actually a graceful way to integrate AI without making it a negative, almost dystopian dynamic of, oh, I'm getting rid of jobs or I'm getting rid of people and I'm replacing with agentics. It's like, no, let's talk about it in a way that it's actually enhancing. There's a positive dynamic to that. And it will absolutely, be led, out of the tech companies most likely because of the emphatic nature that they've had around, around the same. But this will spread very quickly across industries, and you will see the same thing start to happen in health and in finance and in retail, and others as well.
Great. Well, Dallas, it was great to catch up with you. Thank you so much for coming on the show. Happy holidays, and we'll talk to you again very soon.
Thank you very much.
Okay. For this week's Editor's Cut, we are turning to the news that TikTok owner ByteDance has signed a deal to create a U.S.-based TikTok joint venture majority owned by American investors. The joint venture will be responsible for safeguarding U.S. user data in a cloud environment run by Oracle. I want to bring on our co-executive editor, Martin Pierce, for this week's edition of the Editor's Cut. Hey, Martin, how's it going?
Hey, I'm pretty good.
Okay, so what do we think of the ultimate deal that has transpired here for TikTok?
Well, yeah, it's been years, so we're all glad that maybe it's over, but this has got to be the greatest deal ByteDance could possibly have hoped for. This is essentially the deal that ByteDance was pitching to the government under the Biden administration. It's really just only corralling the U.S. User data. They're not selling TikTok itself. Most of TikTok's actual business is staying in ByteDance. This is really the whole idea that the U.S. TikTok has been divested is just not true.
Okay, so there's really no divestiture. It's just, as you said, they're kind of herding around the data and saying, okay,
They're
these
putting
companies.
they're putting the U.S. data entity, which ByteDance had already created. They're putting that into this joint venture. So that part of it is going to sort of technically change. But TikTok itself, the actual the app, the actual advertising, everything else stays with ByteDance. So this is a great outcome for ByteDance, and I have to say it's a pretty good outcome for TikTok fans because you could argue that what ByteDance was originally proposing was the right way to deal with the concerns about the Chinese government, influencing Americans through TikTok. I think now Trump has resolved that issue, but we cannot pretend that ByteDance has been forced to divest TikTok as was required by the law.
Right. Well, but it's easier to say that part, Martin. I mean, it's
It's
easier to
much
say,
easier. Yeah.
it's much easier to explain that to people. So,
Yeah.
okay, but now tell me about the investors that are involved in this new joint venture deal. I mean, we had Oracle, we had Silver Lake. These are names that were in the mix for a while.
Right, and then there's MGX. And then the original American investors in ByteDance also get a stake in this, and ByteDance retains 19.9%. One of the questions is, what do the investors get out of this entity? What will it actually? I mean, presumably, but we don't really understand the economics of this, but presumably ByteDance will pay them some kind of fee, so that the U.S. Data arm, as it is now, will maybe earn a cut of TikTok's revenue. But that's the only way we can imagine that there'll be any value in being an investor in this arm, other than the fact that you will earn brownie points with Trump, which I think that Oracle and MGX and others probably are all keen on. But it's not clear that there's any real business here.
Okay. And so, two more questions for you. So, tactically, after this deal closes on January 2nd, I guess is the new date.
22nd.
January 22nd. So, I mean, what the app itself, it probably looks pretty similar, right?
Yes, I think that the average TikTok person probably won't notice that anything has t- changed at all. So
And then just going back to, I mean, there was this whole discussion around the algorithm, right? Who owns the algorithm? Whether or not the algorithm is the same or not. So it sounds like that has, I mean, nothing has really changed. The
well, no,
algorithm,
I think this new joint venture has control of, or has some kind of control over the algorithm. I think the idea was that ByteDance was going to license the algorithm to the US. It's really a bit unclear how that will work. But I think Trump can argue that he has fixed the problem of security. I think probably for the most part he has, but it's certainly not the deal that this law that was passed called for, which was TikTok to be completely divested. That's
right?
not happening.
Well, that is quite the ending to this TikTok saga. Although I think we know better than to call this the ending,
Yeah.
because I'm sure
It's
a
never
lot.
over.
It's never over. It's the story that keeps giving. So I'm excited to keep talking about it more with you. That is Martin Piers, our co-executive editor here at The Information, for this week's Editor's Cut here on TITV. Well, that does it for today's show. A reminder that we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I'm already excited for our next show on Monday. Have a great rest of your Friday and have a great weekend. Bye-bye for now.